Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video is about indices and which are the sectoral indices that are doing well and to keep an eye on. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position or any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not a portfolio advisor. Whatever decisions with respect to investments you take, kindly do consult your financial advisor and kindly take that on note that any investment into the markets is laden with market risk. Before I talk about the sector, says small request, can you support me on Patreon? Once you do that, let me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, you can pay $100 upfront. You get one year access to my membership. You can also get WhatsApp membership, in which you'll be provided with analysis on indices, analysis on global markets, economy, etc. Plus, all your queries will get answered. Now, in order to discuss about the indices, let me take you to the TradingView website. So let's just give you an idea of how the mid and small caps are doing. Last time around when I was here, I think it was on Thursday or Friday, and the markets were doing well. So it is continuing the trends. The markets are doing extremely well. If you look at Bitcoin, it has dipped over the past few days, but in terms of the mid cap, small cap, and the Nifty, things are looking good. So this is my some of the stocks that I'm tracking at the moment. But let me just give you an idea of the small cap index, and let me just give you an idea of the Nifty, and then we'll go to small cap and mid cap. So Nifty is currently trading at 22,400 levels. It dipped a bit after a massive surge in the last couple of days. It made a high in fact, 22,530 is the new high now, near about that. And the market has dipped about 100 points from there, which is about 0.5% from there. And now we are headed probably towards, we could go below 22,300 the way things are looking. So probably around in this vicinity of 22,200, 150 is where this market could end up getting more support. So in terms of moving averages as well, things are looking much better. So what we have here is that the 50-day moving average, which is extremely critical, is around 21,950 now. So 22,000 to 21,900 should act as major support until the election results, and the market should go higher. Now, how much higher, or how big the move could be, in my opinion, again, we are all taking a reasonable guess at it. 22,420, if you look at say 970 rupees of earnings, we are currently trading at 23 times on FY24 earnings. That is the current earnings. I think we could easily go to say 25 times earnings. I'm not ruling that out. And so we are looking at 24,000, 24,200 on the index. I have been saying this for a while, for the last couple of months, 2 3 months, that the market could head towards in the vicinity of 24,000 to 25,000. And now it looks like that we could do that probably around elections. So just after that, we could be around that. So that's my assessment. Things are looking pretty strong in terms of the Nifty, and the way the Nifty is behaving, because when the fall happened just recently, if I can give you a close up, then we went to as low as 21,700 or so. That was the low. But we quickly bounced back from those lows, because below 21,750 it was the 50-day moving average, and we went below that for a while, for one day, and eventually we made a comeback. So that's the call on the Nifty. I believe that it is headed much higher from here, considering where the market is. The trend will change if it goes below 21,900 and closes below 21,900. Then 21,100 does open up. So that's probably a short term range for the Nifty. 21,100 to 24,200 over the next 6 months is probably where the market could end up being. Now looking at the mid cap index, so let me just give you an idea of the CNX mid cap. 49,300 is where it is. It's up 0.8%. It has been doing extremely well since that fall in mid March, where the index fell. I mean, on 20th of March, the index went to 45,300. On 14th of March, it was around 5,300. So a double bottom kind of a thing happened here, and now a resurgence. 49,800 is the all-time high. It's headed there, doing extremely well, and some of the mid-cap stocks have really come back beautifully. I'll discuss about the sectors in a while, in which I feel that the move is getting sharper and bigger going forward. And in terms of the small cap index as well, which you can say taken the brunt of the fall that took place. 44,900 is where the index is currently making highs for the day, and has been up by 1%. This is because this sector, or the small caps, the indices was overbought. It was overbought earlier, and then massive selling started. I mean, from these levels in February, selling started from institutions and other fraternity because of news and other factors and everything. But this selling began on 6th 7th February, and it continued from there on in, if you see, until end of March. So there was a complete 2 months of selling that took place, probably 1 month of selling mid March, and eventually we catapulted to as low as 40,000 on the index, and now we have recovered nearly 10% from there. 40,900, 40,800 was the low made. Now here the high is 46,820 or so. We are still far off from there, and some good quality small caps which have a market cap of more than 6-7,000 crores up till 20,000 crores have started doing well. So concentrate on small caps that have a market cap of more than 10,000 crores. Do not go below that, because the thing can reverse very quickly. Even a correction of 2-3% could lead to massive falls in stocks which have a market cap of less than, say, 5,000 crores, 1,000 crores, etc. Those micro caps, etc. So small caps in that regard are good, which are larger small caps, and those are the ones that are doing well, and that's why the index is doing well. Here again, your support, if I may just take out the 1 year chart, the support lies around 43,600. That's the major support. So we could still fall, say, 600-700 points, 2% on the index, and yet have support. So yes, it has run up. I believe that there could be a small correction towards 43,700, 800, and then the move could continue. So that's the small cap index. Now the indices that I wanted to talk to you about, that in my opinion are producing very good, you can say, moves in the stocks. There are two indices, although there are many that are doing well. So one by one, if I can go through them on a close up. Autos are making highs. You have capital goods doing extremely well. You have FMCG, which is not doing that well, and we see on the charts. IT not doing that well, and we are seeing that on the charts. Pharma trying to make new highs. PSUs again not that well over the last month or so. The reality is making highs in the moment. So that's how it is. Energy is not doing that well. So some other sectors have come back and is doing well. So something like healthcare, metals have really come back in a big way. I have the manufacturing index, which is trying to make new highs. So that's how it is. Two indices that I like out of these. One is power, the other is auto. So in the power, in this index, what has happened is that RSI is now coming back into the 60s, and things are looking much better now. If you see here in December of 23, when we made that first high with respect to the mid and small caps, etc., between September and December, and eventually started the fall, we had an RSI of 90-93 on these indices, around 94 for something like power, which went to, if I see here, 94. So 94 was the RSI, and eventually we started to fall from these levels of 56 5,800 or so. 5,800 we fell, and in this fall, recent fall in March, we fell to somewhere around 6,700, 6,600, around those levels of 6,000, sorry, 6,000. So the high here was around 5,800. We fell to around 6,000 levels on the power index, and then we have made a resurgence. So this is a complete classic, you can say, correction of this move that took place in February, and we found support near these highs, previous highs, making a higher high, which is a real sign of the strength of an index or a stock, making a higher high at the lows of 6112, or you can say the higher low at 6112, which is better than the highs made in say December of last year for the index. And now the index is breaking out. So the 52-week high or yearly high was somewhere around 68,000, sorry, 6,860, 6,870, and that's where we are breaking out today. So I think in the power sector, one can look at larger power companies. I don't want to name companies here because of regulatory issues and other things, but power companies, look at larger companies in there and larger mid cap companies in their power ancillary companies, and those would be doing well. Companies that are making new highs in this sectors should be considered in here. Second in the list is the auto sector. I believe auto sector is something that is neglected because of the kind of volatility it shows, because of the kind of high beta sector it is. Now auto itself did extremely well until February, and then we saw a small decline. So there we made a high of around 45,800 or so on the auto index, then a small fall, then made a further high, although with lower, you can say, RSI. So strength was not there, but eventually made a high of 48,940 or so. And now we have taken that out, and now we are at 49,400. This is again something that we have taken out just today. So on 5th of March we made this high, and eventually we fell sharply, and we fell to levels of 46,000, which was below 20 DMA and all. And now we are surging ahead, making new highs today. So again, look at auto companies, look at auto ancillaries as well as auto companies that are making new highs in four-wheelers, two-wheelers. I think this trend could continue. These are the, you can say, sector that are now coming up, although we have sectors like capital goods which is booming ahead in that regard, but we want to look at sectors which are now breaking out, and these two sectors, in my opinion, are breaking out. So this was a video on the sectors and the indices. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.